A very good morning, good afternoon, evening to you, ladies and gentlemen, depending on where you're watching from. Welcome to today's conversation. It's been a minute, but I thank you for um, creating time to listen in to this. My name is Monica Kamundi, aka Magical, and I continue to change people's lives by offering financial advice and financial solutions. If you have listened to the initial videos I did, specifically the video on the money market fund, I kept um, talking about the treasury bills, and hence today I want to unpack what the treasury bill is all about. Ladies and gentlemen, as you are aware, governments run projects and they have activities that require funds. Most of the time or sometimes the government do not have money from their pocket to run these projects, and hence they resort into borrowing money for these activities. So in today's conversation, I want to discuss the treasury bill being avenue that the government uses to raise funds. So treasury bills are government short-term instruments. That's the simplest definition of a treasury bills. They're government short-term instruments that the government uses to raise funds for their projects or their activities. So the government could have short-term projects, and hence that's where the treasury bills come in. Treasury bills are issued by the central bank, and you can purchase the bills either by opening a CDS account with the central bank or with a commercial bank. So treasury bills by their very nature are short-term, they are low risk, and they're quite liquid. So when we talk of short-term, it means that the longest treasury bill you can purchase is that of 1 year. So in essence, you can purchase a treasury bill for 3 months, for 6 months, and at most 1 year. Treasury bills are sold at a discount. What this means is that if, for instance, a treasury bill is purchasing at 10%, an interest rate of 10%, you will deposit less the 10% interest. That means you give less the face value. And then what happens is that the amount that you deposit remains with the government for the duration or the term that you've chosen to purchase the treasury bill for. So due to the fact that the treasury bills are quite low risk, they are quite liquid and quite short term, this is where then investment companies that are investing in the money market take some of your money and invest in those entities, because as you remember, money market is a place where you need to access your funds as and when you have a financial need. So the other thing maybe to point out about the treasury bills is that the minimum you can invest is 50,000 Kenya shillings for non-competitive bids and 2 million Kenya shillings for competitive bids. So, ladies and gentlemen, I believe that that conversation gives you a glimpse of what exactly happens when your money is invested in the money market funds. Thank you, and I wish you a lovely day. But before I leave, I continue encouraging you to subscribe to my channel as well as comment by letting me know what other topics you feel would be of value for all of us. Bye bye.